The system is starting to move differently. Something strange is happening inside the global oil system. The UAE leaves OPEC. Gulf allies ask Washington for dollar lifelines. China quietly deepens its energy deals. Central banks keep buying gold. And the Strait of Hormuz turns into a pressure point for the entire global economy. Now, on the surface, these look like separate stories about oil, dollars, China, gold, war risk, etc. But what if they are not separate? What if they are all pointing to the same uncomfortable question? Is the petrodollar system still holding, or is China watching it crack in real time? That is the question behind this entire story, and the answer is not as simple as people think. Let's begin with why the UAE move matters. On paper, the story is simple. The United Arab Emirates wants more freedom to produce oil. It wants more room to meet demand. It does not want to remain trapped inside OPEC and OPEC Plus quotas. That explanation is true, but note that it is not the whole story. When a major Gulf producer leaves OPEC, it is not only leaving a club, it is weakening an old discipline. OPEC was built around coordination, production targets, supply control, market influence, energy politics. So when the UAE walks away, the message is bigger than oil output. It says Abu Dhabi wants room to move. It wants to make decisions based on its own national strategy. And when oil producers start demanding more freedom, the old oil dollar order begins to feel less automatic. Now hold on, this is about the dollar. Why does OPEC matter to the dollar? Let me explain. For decades, oil helped keep the dollar at the center of the global system. Countries needed oil. Oil was priced mostly in dollars, so countries needed dollars. Oil exporters earned dollars. Then many of those dollars flowed back into US markets, especially through treasury bonds. That created a powerful loop. Oil moved, dollars moved, those dollars returned to America, and the United States gained one of the greatest privileges in modern history. It could borrow from the world in its own currency. That is the hidden power of the petrodollar system. It was never only about oil. It was about making the dollar necessary. Let me explain how the old bargain worked. After the United States closed the gold window in the 1970s, the dollar was no longer directly backed by gold. Even at that, the dollar did not become worthless. It became backed by US power, US debt markets, US military reach, trust, habit, and the global need for dollars. Oil became central to that. The Gulf sold energy. The world paid in dollars. The Gulf recycled many of those dollars into American assets, and the United States provided security. That was the old bargain. Oil, dollars, treasuries, protection. And for decades, that system helped Washington sit at the center of global finance. Now, I want you to understand this carefully. The petrodollar system did not end because one magic 50-year contract expired. That claim would sound clean and perfect for a viral headline. But the real world is messier. The petrodollar was not one simple document with one simple expiration date. It was a system, a habit, a security relationship, a financial loop, a political arrangement. So the real question is not whether one contract expired. The real question is whether the incentives still make sense. And that is where the real story begins. Because the Gulf is selling more energy to Asia. Right now, China is building alternatives. Central banks are buying gold. And countries are asking whether they should depend so heavily on a system Washington can weaponize. Now, this is where things get complicated. The Gulf still needs dollars. Do not miss that. The dollar is still central to trade, debt, banking, reserves, and currency stability. But Washington also needs the Gulf. It needs stable oil flows. It needs Gulf wealth to stay inside U.S. markets. It needs those countries not to sell U.S. assets in a panic. And that is why the dollar swap line story matters. When Gulf and Asian allies ask Washington for dollar liquidity, that tells us they still need access to dollars. But when U.S. officials talk about preventing disorderly sales of U.S. assets, that tells us something else, which means America also needs them not to dump those assets. So this is not begging, this is negotiation. You must understand that this is the shift. The old petrodollar order worked because participation felt automatic as oil generally sold in dollars and Gulf wealth in U.S. markets in exchange for American security. But now, countries are using the dollar and hedging against it at the same time. For example, a Gulf state can ask for dollar liquidity, hold U.S. assets, sell oil to Asia, sign deals with China, and explore local currency trade. That is not confusion, it's survival. Countries want options. One door to Washington, one door to Beijing, one door to gold, and one door to alternative payment systems. And once countries start building insurance against the dollar system, the system may still function, but it no longer controls them the same way. That is the crack. Okay, so how is China winning in this situation? China is not winning by replacing the dollar tomorrow. That is not happening. The yuan is not ready to take over global finance. But China does not need to replace the dollar everywhere. It only needs to make the dollar less exclusive. But note that China buys energy. China signs investment deals. China builds payment channels. China dominates key supply chains. China gives Gulf states another major customer. And once a country has another serious buyer, another payment channel, and another diplomatic partner, it negotiates differently with Washington. That is how China gains ground. Quietly and patiently, not by announcing the end of the dollar, but by giving countries enough alternatives to ask for better terms. Now, let's look at the Strait of Hormuz and how it changes the equation. Hormuz is not just water. It is one of the world's most important energy choke points. A huge share of global oil and liquefied natural gas moves through that narrow corridor. When Hormuz becomes unstable, the whole world feels it. Oil prices move, shipping insurance rises, energy costs climb, inflation pressure builds, and food prices can feel it later because fuel affects transport, fertilizer, imports, and production. So note that Hormuz is where geopolitics becomes household economics. A crisis in that waterway does not stay in that waterway. It moves into bond markets, it moves into currencies, it moves into grocery bills. And that is why the petrodollar story cannot be separated from the Iran crisis. Now, let's bring it back to the UAE, because it wants room to move. Leaving OPEC gives Abu Dhabi more freedom to produce, more freedom to invest, more freedom to sell, and more freedom to negotiate. It also sends a message to Saudi Arabia, to Washington, and to Beijing. The UAE does not want every energy decision trapped inside the old hierarchy. It wants to move like an independent energy power. That does not mean it has abandoned Washington. It has not. It still needs the U.S. relationship. It still needs the dollar system. It still benefits from American security. But it also wants options, and in geopolitics, options are power. That is why this move matters, not because it ends OPEC overnight, but because it shows the discipline inside the old system is weakening. But now hold on, because one of the quietest warnings is gold. Central banks have been buying gold at a strong pace in recent years. That matters because central banks are not social media traders. They do not move because of hype. They move because they see long-term risk. Gold is not replacing the dollar as a daily trade currency, but it does something the dollar cannot do. It sits outside another country's payment system. It cannot be frozen in the same way a bank account can be frozen. It is heavy, old, boring, and very useful when trust begins to break. So when countries buy more gold, they are not saying the dollar is dead. They are saying they want insurance. And insurance tells you people are preparing for risk. Notwithstanding, let me be clear, the dollar is still powerful. It is still the main reserve currency. It still dominates global finance. It still sits at the center of trade, debt, banking, and crisis response. No currency is ready to replace it overnight. Not the yuan, not the euro, not gold. So if someone says the dollar has already collapsed, that is not serious analysis. But if someone says nothing is changing, that is also wrong. The real story is not death, it is loss of automatic control. The dollar remains powerful, but more countries want protection from depending on it too much. That is the key. The petrodollar order is not disappearing in one dramatic moment, but it is becoming negotiable. Negotiable is the word. The old system used to feel automatic. Oil priced in dollars. Gulf wealth recycled into U.S. assets. U.S. security in return. But now every part of that loop is being questioned. Oil can move toward Asia. Payments can move through alternative systems. Reserves can move into gold. Gulf states can ask for dollar support while signing deeper deals with China. OPEC discipline can weaken, and U.S. assets can become leverage in talks with Washington. That means the system still exists, but it no longer commands the same obedience. And once the system becomes negotiable, power shifts. Not cleanly, not instantly, but it shifts. Now, this is where the market risk becomes important. If Hormuz stays unstable, energy prices stay under pressure. If energy prices rise, inflation becomes harder to control. If inflation stays high, bond investors demand higher yields. If yields rise, U.S. borrowing becomes more expensive. If U.S. borrowing becomes more expensive, Washington has less room to act without market consequences. That is how an oil crisis becomes a dollar system problem. The U.S. can still borrow, the Treasury market is still deep, but the cost of defending the system rises, and markets may be underestimating that. They often price in stability, they price in quick solutions. They assume the old system will keep working because it has always worked. But what if it is still working while slowly losing control? That is a good question to ask. There are three pathways to this. First, Washington would need to stabilize the Gulf, calm Hormuz, provide liquidity, reassure allies, and keep the dollar system strong. In that case, the system survives, but with a warning label. Second, the crisis drags on. Oil stays unstable. Gulf states keep asking for dollar support while building China ties. That speeds up the move away from full dollar dependence. Third, the conflict spreads. The dollar may even strengthen in the short run because investors run to safety, but the long-term trust problem gets worse. Countries will ask why their reserves, trade, and energy security should depend so heavily on one power's wars, sanctions, and political decisions. None of these paths fully restores the old world. So when we say the end of the petrodollar, understand what that means. It does not mean the dollar disappears tomorrow. It does not mean every oil contract moves into yuan next week. It does not mean America suddenly loses all financial power. The real ending is slower. A little more oil traded differently. A little more gold held by central banks. A little more Gulf-China cooperation. A little more local currency settlement. A little more pressure on U.S. assets. A little less obedience to Washington. That is how systems change. Not always through collapse. Sometimes through negotiation. And this may be the most important point. The petrodollar order may not end because the world rejects the dollar all at once. It may end because oil producers stop acting like the dollar is the only game in town. So the biggest danger is not that everything collapses tomorrow. The danger is that investors, politicians, and ordinary people keep assuming the old system still works automatically, while the countries inside that system are already negotiating the next one. That is the real story. The end of the petrodollar may not come as a crash. It may come as a negotiation. And China knows the system is cracking because China is helping build the alternatives. which is not enough to replace the dollar overnight, but enough to change how countries bargain with Washington. If this breakdown helped you understand the power struggle behind oil, OPEC, China, and the dollar, subscribe to the channel now. Hit the like button so more people see this analysis. Share this video with someone who thinks this is just about oil. And turn on notifications, because the next global monetary system is not being announced, it is being negotiated. Drop your thoughts in the comments. Is this really the beginning of the end for the petrodollar? Or is the dollar system still too powerful to break? This is Liberation Lens, where perspective matters, and where we do not just follow the headline, we follow the power behind it.